why hike tariffs on steel and aluminum, right? So if you're confused about Trump's plan, you're not alone. Now, reciprocal tariffs will be announced from 2nd April, but Trump has already preempted by announcing 25% tariffs on autos and auto parts. Earlier, he slapped secondary tariffs on countries importing crude oil from Venezuela. Though he has been talking about lowering crude prices to bring down inflation. So, on one side, you impose tariffs on a crude producing country, and then you say that we want to bring down the crude prices. So there is a lot of things which are not gelling together. So let's see how it plays out. Market outlook. The tariff announcement on 2nd April are likely to be the beginning of negotiations and possible retaliation by some countries. So it is not a one-day event. They will give their initial bids or initial tariffs on 2nd April, announce it to the world, and then the negotiations will start and it will be brought down. So there could be further rounds of tariffs, and it will take weeks for businesses to work out the impact due to supply chain complications, etc. Now, for India, I did a study. The most vulnerable will be autos, seafood, and fisheries. Lesser impact on pharma, electronics, apparels, gems, and jewelries. Now, in pharma, I would watch for Sun Pharma, Cipla, Lupin. In jewelry, Malabar Gold and Diamond, Renaissance Jewelry, Rajesh Exports, Kalyan Jewelers, etc. EMS, I will watch for Dixon and Keynes because they are talking about selling stuff, or they are already selling some stuff in electronic items to US. Steel and aluminum will face indirect risk due to China's excess capacity. So that will be another risk unless the government also puts certain duties on whatever is coming inside the country from China. IT would be impacted by US discretionary and client spending. So I'll watch for Infosys, TCS, and LTIM. Maximum impact would be on LTIM because they get a lot of orders from the US. Now, FPI selling should decline, oblique could turn net positive, and some initial signs are visible in numbers. Now, what we have seen over the month of March is some small buying and big short covering. And that short covering is done, small buying is done. Now from here, more amount of incremental buying is required to take the markets higher. So what has happened is FPIs have turned net buyers of Indian equities in March due to expectations of rate cut by RBI, attractive valuations, and even Fed signaled possibility of 2 additional rate cuts this year. Now, most of the FIs, it seems to be that they are of the view that India can manage the global risk with strong domestic consumption growth and RBI acting proactively to give required liquidity to the system. Now, RBI is likely to cut repo rate by 25 basis point in April policy. So this is well documented. And MPC is likely to shift focus from inflation to growth. They may do a 25 basis point reduction in repo rate and maintain a neutral stance amid global headwinds. So they would be able to poise both ways because of neutral stance. Now, just for information, Germany's fiscal boost can fire up Indian defense stocks. And I told in beginning of March also the same thing, that start looking at defense stocks moment the German fiscal boost stock started. The reason is India's defense exports have surged to over 21,000 crore in FY24. Just for information, Mazagon Dock is making 6 submarines with a German company. We can export aircrafts, guns, missiles, rockets, radars, simulators, armored vehicles, protective gear, surveillance systems, etc. So I will watch out for stocks like BEL, BDL, HAL, Cochin, Shipyard, Mazagon Dock, Data Patterns, Zen Technology, etc., which could benefit from export opportunity, and there will be many more. So I'm not restricting it to that, but I'm looking at them right now. So the key question which is important is, have investors missed the boat after 6% rally in Nifty and around 7 to 8% rally in the broader market? Now the answer to this is Firstly, we must understand what led to the decline. First, US Treasury yields, they started going up, FI selling and shorting. Corporate earnings were poor, US elections, and then after that, the money started moving to China and US from India because China was doing a lot of technology stuff, etc. And the markets were considered to be weak, and Z was found to be corporate friendly and all those measures. And then US exceptionalism. So the money was moving into US after the Trump elections. Now the markets have risen in March, basically due to FI buying, short covering, decline in dollar index, strengthening of rupee, valuations have improved, along with there has been some amount of tax loss harvesting and year-end buying. So the factors are in front of you. Now, if FIs have reduced their short positions, what will they turn overall long is we have to watch for that. Initial sets of corporate earnings will indicate if there is a noticeable recovery. Otherwise, short selling could persist. So we have to watch right now and can't become over big bullish also. But I think that the worst is over because from here, liquidity is good. RBI is cutting rates. So the cost of borrowing is going to be lower and corporate earnings should improve from here. And government is also spending now. Now, if you see the FIDI data, this is of the beginning of the week, 24th March, they had net short positions of 95,496. It has reduced to 49,000 by end of the month, and that is, it had come down to around 30,000 on expiry day. So they have rolled over 30,000 shorts and some longs, and they have added certain shorts on Friday. So we'll have to watch what happens to these. Though on stock futures, though they are indecisive because it has come down, but they have long positions of 15.64 lakh positions. Now coming to pros, that is index futures, they were short. They have, over the week, they have added some short positions, so they are indecisive. They are also long on stock futures. So it is index short, stocks long. So it is kind of in between. Clients, they were long, they were adding shorts, and now they had brought their long positions down. So on Friday, they have added longs now. So again, the reverse has started. In stock futures also, they have added long. So now they are strong bullish on stock futures. So if you play the stocks which are in momentum, it is better because everybody is long on stocks. So if you see from here. And index futures, they were long, that is DIs, and now they have reduced their long position slightly. Now in terms of cash buying, on Friday, the DIs bought 7,600 odd crores, but that was basically due to that index management on the year end, while FI is sold. So we'll have to still watch for this action. Where if you see the daily data, from 17th onwards, if you see here, the OI, they had 1.7.2 minus 1.72 lakh short positions, which reduced to 30,000 on 27 March. And that is where the rally took place. And the index moved from 22,500 to 23,000, roughly 600, and then it went to 800 also. So the 1,000-point rally is in front of you because of this short covering and some kind of buying in cash. Now, since they turned bearish on Friday and they added shorts, so market is also corrected. So I am only watching this position. So what is the trend now from here on for the FIs, and I will go with that trend, simple. Now, coming to US, the week began with advances and ended with sell-off on Friday. So there's a big sell-off on Friday, and we'll have to see what happens on Monday. The reason was that the key inflation data came in higher than anticipation in the US. So that was a trigger. Now, as per that, so if you see the US bond yields, it had risen from that 3.6 level to 4.8, and it has retraced now 50% of that rise. So it is at that critical level of 4.2. So if the expectations are that US economy is going to be slower and there were going to be rate cuts, so then the bond yields will come down, which is always positive. So we'll have to watch for this. And bond yields are reflecting that. Now, dollar index corrected. It has corrected 61%, the complete rise to 110 odd level, basically because of Trump winning from 100 to 110. It went there. It has fallen. It tried to rise because of tariff announcements, but again on Friday it sold off. So the dollar is at 61% retracement. It will consolidate here, may rise some bit, but then it will finally come down. And I think once it comes down, it is positive. So let the US economy go down, let the US markets go down. Anything like this is positive for the rest of the world. Now, one positive thing was USD INR for us. It came down, or the rupee strengthened roughly half a 0.53% last week. So the trajectory is now lower because the dollar is weakening. So the rupee is trending, plus there would be some adjustment at end of the year, but we'll see how the thing goes from here. Next is crude. Crude, because of this Venezuela thing, went up to 73, but it's still below this declining trend line. So we'll have to see where it goes from here. Gold has resumed its upward trajectory because it is a play on, or it's a hedge against volatility. And for us Indians, it's a hedge against rupee depreciation also. Now, the point here is that the Indian gold prices also move in tandem with global prices, and India imports large amount of gold. So every rise of gold along with depreciation of currency is positive for Indian gold. Copper is on a separate path now. So if you see here, there is it has broken through this last high it had made, and it has now gone up. The reason is there is a threat of imports and because of tariffs in the US, and safe haven buying is taking place in commodities at present because of volatility, etc. US imports have increased to avoid tariffs. This led to increase in US premiums on copper and shortage in other parts of the world. So the US prices went up, leading to overall increase in prices. Copper prices can go up even 20% from current levels. After that, extra supply comes in and the prices cool down, because it's not a demand and supply problem overall, but a specific geographic demand and supply issue. So that's why it is showing this spike. Now, who will do well? Hind Copper has moved from 200 to 220 odd, but it makes no difference to them, etc. Hindalco should do well. But over a longer term, their business will get impacted when Adani and JSW's copper smelting capacity comes on stream. Now, Bitcoin is subdued. It is at these levels, but volatility has reduced. Nasdaq fell 2.39%. It is below this trend line support, so it looks weak now. Same with Dow Jones. It has fallen, and now it is at 50-day moving average. 50-week moving average. Yeah. So Indian government bond yields, they have come to the level, they fell around 0.72%. So they have come to below 6.6, and trajectory on anticipation of rate cuts, and trajectory is expected to go to 6.5. So this is a good place to hide in these kind of volatile times. Now, Nifty, if you see here, this is a weekly chart. So this is what I was talking about, new terminology I have learned. This is called gravestone doji, because it has a very high upper shadow. So that means it couldn't sustain and has closed there. Though the good part is that it has closed above the 20 EMA on the weekly chart. So you can say that after a big rise, it is consolidating, but generally the implications are after this gravestone doji with a long upper shadow is that the trend tends to revert. So be careful. It is at a very crucial place right now at the cusp of these moving averages. So we'll have to see from here. Now, let's take Nifty on the daily chart. So from this complete fall, from the 26,278 to 22,000 and below, so it has retraced roughly 38% of the rise. And now this 23,400 is a critical place where these two moving averages are converging, the 100 and 200-day moving averages. So these are critical. And if you see below also, these averages are trending upwards only. So from 23,400 to 23,000 should be a good support, this zone. So if 23,400 breaks and then this levels in between 23,200, 23,000 breaks, then one has to get short. Otherwise, after some consolidation and once there is some clarity, this rise should continue. Now, talking about hourly chart. So if you see here, this is a 5-wave move which is forming from the lows. So for the 5th wave to be successful, it has to cross this high. So it is 23,869. So the day the Nifty crosses 23,869 and goes higher, the 5th wave is in action. And then generally what happens is that the length of the 5th wave is same as the length of wave 1. So this impulse wave can take it to 23,200. So this is, one has to watch out for this action. Otherwise, see that on 24th, there was a rise, and after that Nifty has been consolidating, but still it is around 20 EMA. So it is nothing alarming as such right now. Now Nifty Bank is a stronger part, rose around 1.9%. It's now very clearly above the 20-50 EMAs, and it has gone above the large green candle last week. So that means there is a follow-through buying. Hence, it has to cross 52,000 for a sustained move to reclaim the all-time high. The reason is, if you see here, from its previous high, the Bank Nifty, after making a kind of a W pattern, has retraced 61%. So once this 61% retracement is taken out, this 51,900 to 52,000 level goes up, taken out. Once it goes above this, then it will test the previous high. So after 61%, it is full retracement. Maybe after some back to the all-time high, maybe with some consolidation, but then the path becomes very clear. It's in good momentum also. And the reason is HDFC Bank. If you see here, HDFC Bank has broken out. And I think if this momentum continues, it will test the previous high of 1880 because it's now very close here. So be with momentum. This is a stock which is done well in 24. In 24, it was at around 1300, beginning of 24. And I was telling people to buy this stock at 1300 odd. And now it has given decent returns on the last financial year. Reliance is, though it is good on weekly chart, it is above 20 EMA and above 200 EMA, but it will face resistance at the 1300 or 1320 levels. So it has to clear these levels. I think that should be done only if the results are good. Otherwise, it will test the last low of 1200 to 1160. So it depends now, its further movement will depend on the results. Midcap select weekly chart. So if you see here, it tried to go up, but it got sold off. So it is at a critical juncture. So it will move with the rest of the markets now, but it is well above the support. Similarly, with small caps, it has risen from the lower level of 15,000, but it is now again negative 0.55 last week. Tried to go up, got sold off. So there was some profit booking. So let's see if it can take out this 20 and 50 EMA. Now coming to sectors, first is IT, Nifty IT. This is a weekly chart. If you see here, it is the weakest right now, below the 100 EMA. So right now, there is no strength. It tried to rise, but it was not able to sustain. So now it has come back below this, and it has also made the same gravestone doji here. So if case the US news is negative, it can go down in a big way and test this 33,000 odd levels. Auto, again, it is impacted because of weakish sales and tariffs announcement, etc. Though it is above the 100 EMA. So we'll have to see here, but nothing much is expected from here. And I think on the next trading day, it will get impacted because the March sale numbers, etc. will come. Pharma got impacted. It was rising above the 20 EMA, but has been impacted due to, even yesterday also, Trump is talking about some tariffs on pharma stocks. So if this goes, then the generic stocks will take the index down. FMCG is now rising from the bottom. So let's see, it is testing the 100 EMA, if it can go above this. So this is showing some strength now, relative strength as compared to rest of the market. Metal index, again, it was above the 20 EMA and now it has slightly halted. We'll have to see what is the news, because if the dollar weakens, then the metal stocks do well. So that should be positive for metal stocks if the dollar is weakening. Now I'll talk about two stocks. First is JSW Infrastructure. It has demonstrated exceptional growth, achieving a CAGR of 25% in cargo volumes over FY19 to 2024, 11% year-on-year growth in cargo handled in 3 months FY25, and 45% year-on-year growth in third-party cargo in 9 months FY25, well above India's growth rate of 5%. So it is doing better than our basic growth rate in cargo handling. In the past 1 year, the company has signed concessions agreement and it intends to develop 5 more ports terminals in India. In addition, it operates 2 port terminals under the operation and maintenance arrangements and 1 liquid storage terminal in the UAE. It has transitioned from predominantly handling captive cargo for JSW Group and related entities to handling volumes for third-party customers, 48% of volumes in 3 months FY25. It has embarked on a massive capex plan of 30,000 crore to notably expand its total cargo handling capacity from 174 million tons per annum currently to 400 million tons per annum by FY30. It has an aggressive roadmap to build its logistic infrastructure and network under JSW Ports Logistics with a capex of 9,000 crore by FY30. It has acquired 70.37% stake in Navkar Corp to handle the logistics part. So they are now moving towards logistics from cargo. It will strengthen its market dominance, leading to 14% volume CAGR over the next 3 years. It should drive 22% CAGR in revenue and a 21% CAGR in EBITDA over the same period. So it's a clean growth stock over the next 2-3 years, and with capex going on. Now, what it is doing is, these are its various ports. Total operational capacity is 174 right now. So at JNPA, which is its terminals, it has got 2 liquid cargo berths being constructed. At Mangalore Container Terminal, they are expanding container terminal capacity. At Kenny Port, which is a port, they are creating a greenfield port, 30 million tons per annum deep water port they are constructing there. At Jatadhar in Odisha, they are making a 30 million ton per annum port. Tuticorin, they have a concession agreement for construction of 7 MTPA berth. So they are on all India's shores. Both shores they are there, and they are doing well, and they are expanding their port capacity over a period of time. Now, in terms of logistics, they have all these things. So they are establishing inland container depots at various places and container freight stations also to help in the logistics in conjunction with their ports. So they are spending around 8,000 crore they're expecting by FY30 EBITDA of 2,000 crore and a capex of 9,000 crore, etc., is expected out of this. Now coming to their P&L, it is expected to have a net sales growth, as I told you, around 20% over the next 2-3 years till FY27. So and EBITDA margins are also stable above 50%, etc. And PAT is improving as expected around 20%. So it will improve in that range over the next 2-3 years, with PAT margins also improving. So it's in a steady path. It is expected to do return ratios, etc. Good. Rest, there's not too much of debt. They are reducing that. EPS, they are expected to do 7.7 in FY26 and 9.8 in FY27. So taking a mean of around 9 at 40 times 360 should be a decent value. Now, actually, this stock gave a very decent opportunity to accumulate when it fell to 220 in February, right? And then in March, it has risen from 240 to 320. So that is roughly 30% rise in just a month. So every dip here is a buying opportunity. Every dip near the moving averages, which you will get a dip because it has a certain rise now and it is slightly overbought. So, but it's a stock for long term, decent stock. Next stock, this is very interesting because somebody had asked this question, so I'm covering this. One has to understand the cyclicality of metals, and this is the best example. It's a leading integrated producer of aluminum with operations across bauxite mining, alumina refining, aluminum smelting, power generation, and downstream production. The company has outlined 30,000 crore growth capex targeting 500 kilotons per annum expansion of its aluminum smelter and a 1200 megawatt captive power plant to feed the smelters, just to bring their cost down. So they will have a captive power plant. It has positioned itself as a low-cost global producer of bauxite and alumina, driven by its integrated operations, captive mines and power plants, and fully depreciated assets, which lower capital cost. Now, Pottangi bauxite mine is set to commence operation in 6 months. New alumina refinery targeted for mechanical completion by December 25 is expected to add 200 kiloton or 250 kiloton in volumes by FY26, and it's expected to scale up to 1 million tons in FY27. It estimates the brownfield 0.5 million ton aluminum smelter expansion at an expected ROI of 11.5%. It plans to achieve 100% utilization of the existing 2.275 million ton alumina capacity and augment aluminum production to 104% utilization level in FY26. It benefited from alumina prices surging 107% year-on-year and 38% Q-on-Q to USD 703 per ton. However, the current price level of USD 530 per ton, a 25% decline from Q3 average, reflects the anticipated rebalancing of the supply chain. The alumina prices went up because there was a problem with alumina production in China. But that level is not sustainable. Generally, the alumina prices are 17 to 18% of the aluminium prices. So even the present prices are higher. Now let's see their profit and loss account. So if you see here, the trailing 12 months is very strong because the margins have improved. So if you see here, there is a lot of cyclicality in margins. So on where the prices are good, margins are 25%. When the prices go down, then the margins fall to 17%, etc. And then this year the margins are 39%. And that has an impact on their profit, net profit and profit before tax. So this year they had good profit and good EPS of 23. Last year it was 11, before that 8, then before that 16. So there is a lot of cyclicality in this, and that will impact the dividend payout also. Now, this is a trend expected of aluminum prices. So if you see here, aluminum prices are going up. So this is expected to be around for FY26. Aluminum prices are expected to be 2600 USD per ton and go up slightly in FY27. The alumina prices, which are presently at, and these guys are major producer of alumina. So alumina prices are higher. They're expected to be lower next year, and generally the 450 odd USD per ton in FY27. So that's why the prices are coming down despite good results in the last quarter. Now, what they are going to do is their major capacities are going to come up in FY27. So if you see, bauxite mining is going to go up, mines are going to get commissioned, alumina production is going to go up, alumina sales are expected to go up. Now, if you see here, it is 1.87 is the sale. The balance is used for aluminum production, the alumina they make. So aluminum production is going to generally remain the same. Now, that is why the analyst estimates have been revised downwards. So if you see here for FY26, net sales are expected to be 30% lower. EBITDA is expected to be 45% lower than estimates. So these are the expectations, and PAT is expected to be previous estimates were very high, 50% lower because of lower alumina prices now. Things will improve in FY27. So if you see here, their P&L, this year they're expected to do around 23 EPS. But next year, the revenue is expected to go down and EPS is expected to be around 17 and PAT is expected to go down. FY27, because of increased capacity, etc., EPS may be 31, but you're not sure right now about alumina prices, aluminium prices, what happens to them, because these things change every 2-3 months. So year on year, FY26, let's restrict ourselves to next year only. FY26 is expected to be lower revenues. Growth in EBITDA is going to be lower. ROE, ROC are going to be lower, and net income is going to be lower. So the EPS is lower, that is around 17, which is expected. So at 17 EPS, it is now at around 10 P. Generally, it trades like last year, it was trading at 7.8. So if you assume that, now if you see here, the charts, it went up to 260 because of better alumina prices. The results were exceptional for December quarter, and then the price is falling because people are aware that the next quarter and future is not going to be that good, as global aluminum prices can fall if the US imports are redirected to other markets. Now, US imports a lot of aluminum from Canada and Mexico. So if the US puts tariffs on them, they will redirect their stuff to other markets, so the aluminum prices will fall. And I told you, alumina prices are generally 17 to 18% to LME aluminum. So their prices depend a lot on supply chains. Now, this can fall even in a rising market. This is at least for this year, this is the low. It can fall further. So there is no value. Even if next year you're expecting 15 to 17, it can still fall to around 140 or 130 also at 8p, etc. So one has to be very careful this stock and don't look at its past performance. So I finished. We'll take questions now.